What is up, everybody? Steve here. I hope you are doing well. Today I'm going to talk about the housing market indicator monthly update for the month of April throughout the United States. And right off the bat, we have 4.48 million households that are behind on their mortgage payments. April showed activity in the housing market slowed overall. Purchases of new homes declined for the third consecutive month. New single-family home sales fell 8.6%. I did another video on that, basically went into more detail on that. If you guys want to take a look at that as well, I'll link that for you guys. Sales of existing homes declined to the slowest pace since June of 2020. NAR reported sales of existing homes fell 2.7%. New home construction rose slightly. Total housing starts increased 0.3% to 1.79 million units, the highest since 2006. Single-family starts fell 1.7% to 1.2 million homes. That is a lot of inventory, and I don't think that we're going to have buyers lined up, especially with mortgage interest rates the way they're at right now, lined up to actually execute and basically close on these homes. I just don't see it. Another thing pertaining to multifamily houses, these are five or more units in a structure. That increased 7.5% from February, and we're 28.1% higher than last year. Now, a lot of those, they're being built for institutional investors. I think even in our local market here in Southwest Florida, as a real estate broker, I see it all over the place. There are a lot of apartment complexes that have been built, and I expect that we're going to see some vacancies. And last real estate recession, we saw vacancies. You could get into rentals with 2 months for free. There was a lot of incentives to get people into these rental properties. So I don't know. I think we're gonna see that again. Home values increased 2.08% from the previous month and 19.4% year over year. The FHFA index shows that U.S. home values are 69% above the peak set in April 2007 during the housing bubble. Are we inflated in pricing? Let me know your comments below. I truly think we are. The inventory of homes for sale rose. The listed inventory for new homes for sale at 407,000 units, which is still historically low, at the end of March increased 3.8% from February and 33.4% from last year. That inventory would support 6.4 months of sales at the current sales pace, up 5.6 months in February. Available existing homes for sale at 950,000 units in March increased 11.8%. The long-term average for months supply of homes on the market is 6 months. Now that's getting more into a healthier market, but I predict probably in the next 5 to 7 months that 6 months of homes is going to increase to probably at least 8 months worth of homes available. Could even be higher, and that's just going to be simple supply and demand. If we have a lot more supply come to market, prices will start to come down. Forbearance on mortgage loans continued to decline. The share of homeowners with mortgages in forbearance was 1.05%, which is roughly 524,000 households in March, down from 4.9% 1 year ago. So that is good. People in forbearance, they're working out, loan modifications. They're selling properties. They're doing complete refinances. Housing insecurity due to the pandemic remains elevated, but is improving. Week 44, March 30th to April 11th, 2022, shows that approximately 13.3% or 5.95 million renter households were behind on rental payments. I know certain states are, the state of Florida, we're pretty good in terms of being able to move forward with the eviction process in a timely manner, usually in about 30 days. But I know that certain cities, certain states like California and New York, it's much more difficult to move people out of the houses for not paying. But you're talking almost 6 million people are behind on rental payments. That's astonishing. What's going to happen with those landlords? I think we're going to see more of that inventory hit market. 12.6% were 6 or more months behind. 2.16 million renter households feared eviction was imminent in the next 2 months. HUD estimates that 5.6% or 4.48 million homeowner households were behind on their mortgage payments. Approximately 3% of homeowner households were not at all confident in their ability to pay their mortgage on time, and 0.94%, so almost 1%, or 750,000 homeowners feared eviction was imminent in the next 2 months. So you're talking, 750,000 properties could come on market as short sales or foreclosures if these people can't get current. And it sounds like, based on these analysis and surveys that are going out, that these people might not be able to get out. And if you know anybody that's in that kind of situation, have them speak to a real estate agent as quickly as possible, because there might be a decent equity position on these properties as well, where they could, even if they're behind on their mortgage, they can still get out and sell, maybe have some cash in their pocket as well. Anyway, I will drop the link in the description so you guys can read up on this for yourself as well. And let me know your thoughts. Are you guys seeing more foreclosures? You're seeing more short sales come to your local market? Comment below, and I appreciate you guys being here today. Thanks a lot.